Welcome to Kopi Time, a podcast series on markets and economies from DBS Group Research. I'm Panarchy Partners Chief Economist, welcoming you to our 117th episode. Today, we welcome back an old friend, Munib Madni, CEO of Singapore-based Panarchy Partners, a fund management company with responsible investing at its core. Panarchy is also a certified B Corporation, meeting the high standards of verified social and environmental performance, public transparency, and legal accountability to balance profit and purpose. We last spoke with Munib in the middle of 2022. Let's get a sense of what Panarchy Partner has been up to since then. And I want to ask him a couple of questions in general in the world of ESG type investing based on some recent headlines that I've been coming across. So Munib Madni, great to have you back on Kopi Time.
Great to be here, Tamur. It's every 18 months almost, or 2 years we catch up, which is fantastic.
I think there's so much going on with your firm and the work that you do. I think that's a maximum period, and we need to probably do even more frequently. Munib, give us a highlight reel, if you will, of Panarchy Partners' achievements since we last talked.
Yeah. So last time we met, I think I was already sort of sharing with you how my team and myself, we were helping our institutional clients, with their portfolios, moving from a risk return outcome to a risk return sustainability outcome. And even when we last spoke, we talked a lot about climate investing at a very high level, at a, let's say, 30,000 foot level and a helicopter level. Since then, my team have obviously, other than managing our global equity strategy, which is a strategy of purposeful companies, we've fine-tuned and sort of strengthened our environmental capital sort of focus within the portfolios. Within our own portfolios, we've put in place certain climate goals and guardrails, which is a must-have nowadays for most global equity strategies. And we've also sort of now been engaging with our portfolio companies and also our investors, most of whom are institutional investors, on how they can do climate investing in the listed equity space, but with an impact focus as opposed to having just very climate conscious strategies. And again, later on, we can discuss the difference between a climate conscious strategy and let's say, a climate impact strategy. So the focus over the last 18 months has very well been on how we can share our learnings and also help our clients move their portfolios towards a climate impact strategy within the listed equity space. And that's been taking a lot of time as well.
I can imagine. Wait, just off the cuff question. A company, let's say a big fossil fuel producing company, it emits 100 tons of carbon a year. Of course, that's a very big polluting entity in this world, but it is on a credible path to reduce that emission by 10% in the next 2 years. Would that make you interested in investing in that company?
So last time when we spoke, Tamur, I said to you, my personal philosophy is that incremental positive change is a good move, and absolute big numbers follow. So for me, I'm always an investor who is looking at the incremental pace of change as opposed to big sort of commitments that are made, with zero plans. And there's plenty of that, especially when we come to climate. And we will discuss that in a bit more detail later. So when I and my team, when we look at a company, we definitely want to see some movement in the right direction. We want to see, are they genuinely doing it? And have they got in place plans and strategies to achieve that, as opposed to someone who just goes and makes a blind, sort of without no plans, commitment, which is not genuine. So I think to answer your question, you need to sort of open the hood and look under the hood to see what truly is that company, doing, delivering, and not just go with headline numbers.
Okay, without mentioning any company's name, but if I see an ad by a global energy giant, and we see many ads about how they are, focusing on decarbonization and greening the world. And if you do your due diligence, and you find that energy giant is sort of, speaking the talk but also doing the job, would you then consider investing in a fossil fuel company?
So for us in our portfolios, we only invest in fossil fuel companies if there's a clear line of sight to removal of fossil fuels over an extended period of time, right? A realistic period of time. So I would say if someone is increasing their let's say renewable portfolio, but at the same time they're going and exploring for more oil and gas,
right,
it'll be fine. It would be hard for us to justify having that in our portfolio. Now, that is our approach. There are fund managers and in strategies that do, invest in companies in transition. And we spoke about that in a bit more detail last time we spoke. So I think the definition I think that's where when I originally said that we've spent a lot of time putting in place in our global equity strategy, climate goals and guardrails. And every investor who comes into our portfolio comes in knowing exactly what kind of climate goals we expect our global equity strategy to have and what guardrails. And one of the guardrails is that there has to be, if we are going to invest in a fossil fuel company, there has to be a clear line of sight of removal of fossil fuels over a reasonable and feasible period. It has to be almost in line with what IPCC or the SBTi folks are prescribing for a fossil fuel company.
Great.
Again, that is our mandate. Other people can have different mandates.
Sure. On my day-to-day work, spend a lot of time looking at the U.S. economy, and I see that we're stepping into 2024 with the U.S. still looking very, very strong economy-wise. It's got a very tight labor market, and the IRA Act, that Inflation Reduction Act that President Biden passed a couple of years ago, is turbocharging a lot of investment in the green area. And yet, Munib, I recently read that last year, ESG job departures outpaced arrivals in the US, and it marked a reversal of a multi-year trend. So just give me a sense whether you've been sort of following this, and if there's anything to read from that, and also, is there some counterpart to that observation with respect to Asia?
Yeah. Now, you're asking me to comment on the US as an economist. Now, that's dangerous, right? And I'm so scared of answering that because you know the US economy much better than I do. And you also know the jobs breakdown in the US much better than I do. So it's going to be hard for me to say how much of the ESG, let's say, exits versus applications, or let's say new job entries, is because of a step away from IRA or IRA not being delivered. And there's, at least on the ground, when I speak to a lot of portfolio companies in the US who are considered beneficiaries of IRA, they would openly say that they're not seeing the money hit their accounts yet, right? And there's still bureaucracy, there's still a lot of sort of pent-up potential, but whether they're seeing it actually manifest itself in more sales and therefore more employees and more production, that is not happened yet. So whether there was a little bit of excitement when it all happened 2 years ago, and people hired people thinking, okay, there's a tsunami of sort of environmental deals coming through and not showing up, and then they're having to cut those people. That could very well be happening on the ground in the US. If I take a sort of a global sort of approach to sustainability, ESG roles, I think there is no doubt, even in Asia, for example, there's plenty of demand for folks who are either upgrading their own experiences and skill sets to include sustainability. And I think, especially if you look at environmental capital-focused roles, especially in Asia, I would say there will be demand for a long time to come still, because we're starting from a very low base. As we will speak later on, the actions taken by companies, regulators, organizations in Asia is still at a very low base. And it's part of it is the chicken and the egg. Many of them don't have the actual employee capacity and the knowledge and know-how. So I think that in Asia, I think there's still going to be plenty of demand for people who are skilled in sustainability, and especially in the environmental space.
Yeah, someone makes you want to wish that there was an entity out there that provided the know-how to companies. That's just a teaser. We'll come to that a little later. Munib, one more news headline-related question. So I read last week that JP Morgan Asset Management, BlackRock, and State Street Global Advisors, they have all retreated from the Climate Action 100 Plus Investor Compact. And the interpretation in the press was that they don't want to deal with the political and legal liability that the compact would have sort of, push on them. Can you unpack this development for us?
Yeah, it's hard for me to say why they left, but I can sort of maybe share some observations which might be helpful to your listeners. So if you look at the whole Climate Action 100 plus, right, it was initially started in 2017, and it was meant to be for a 5-year period. And the whole purpose of this was that quite a few big investors all got together and having substantial amount of AUM under their sort of, you could say, mandates, they had obviously influence on companies. And the view was that let's go and focus on some of the biggest emitters and get them to actually commit to certain climate targets and goals, right? And that was the whole purpose of CA 100. And it's been relatively successful in doing that. All these investors did come out, did go and I would say in some cases name and shame some of these companies into putting in climate targets, and the whole approach of CA 100 has been very target oriented, with very clear, if a company does not do it, they're going to take action almost in an activist way and sort of bring voting action against the management and the board. And I think that worked. It worked for a while, getting people to come and commit to targets. But once those targets have been put in place, many investors are like, okay, there's now a next level of engagement. And that next level of engagement most probably cannot be aggressive. It cannot be the name and sort of shame approach, maybe. So that's where I think some of these investors that you named may be thinking, okay, we've done what the coalition or this grouping initiative wanted to do for the first, let's say, 5 years. Now it's time for us to revisit how we engage with our portfolio companies. That would be my sort of observation. I think for me and my team at Panarchy Partners, the one thing that becomes very clear from this event is that there's two things that we've believed in for a while now. The first one is that the name and shame approach does not work. And this is me speaking for 30 years of doing investing and engaging with listed companies globally. And especially in Asia, it doesn't work, but even globally, to get management and boards of companies to act and act in areas that are not very, let's say, clearly beneficial to the shareholders in a very quick instance. The name and shame approach does not. They might commit to targets, but they're not going to act on it. So that, to me, is very clear from what happened with this, coalition, is that you can't sort of force through name and shaming companies into acting. I think the second thing that became very clear is that investors have plenty of climate initiatives, which they force their investee companies to adhere to, right? There's many of them. I don't have to mention them here, but they've been around for the last 5 to 7 years. What is missing is the how. How are those investee companies going to go and deliver on those commitments that these initiatives have forced them to make? And we're at that moment now where even investors, when they go and speak to their investee companies, are saying, thank you for agreeing to the CA 100 plus, or let's say net zero commitments or SBTI, you name it, all these initiatives and targets. But the how is missing. Not many people are telling their investee companies, this is how maybe you can achieve that. And I think that is also become clear from this reversal, or let's say of people leaving maybe something like the CA 100, is that investors know they've done their first big move of converting people to putting in climate ambitions and targets, but now we're in the next phase. How do we get these converted to actually act?
So Munib, I'm really curious about that nitty-gritty part. I think every year when COP happens, and we hear these sweeping announcements and proclamations by both countries and companies, 2050, 2060 net zero, this, that, or even China making very heroic, claims about how its carbon intensity would sort of peak this decade and it will progressively decline. But to your point, these are all endpoints, very well taken, very well intentioned. But how do we go from here to there? So you said that there's no shortage of coalitions. Let's talk about one of those coalitions, Gigaton Coalition. You've been working on it. Let's talk about it. What is it, and what do you see it becoming over time?
Yeah, so the Gigaton Coalition is the Panarchy Partners team solution, I would say, to a trilemma that we have. And the trilemma that we have is first that globally we know that there's a depleting carbon budget. If you look at the work that's being done by the Carbon Project, they say that we've got about 625 billion tons of carbon emissions left before we go beyond a 1.7 degrees or higher from industrial level. So at current emission levels, that's 12 years. So a depleting carbon budget, how do we stop depleting it, conserve it, if not grow that pie, is a challenge, and that's a global challenge. The second dilemma is that many invested companies, as I was saying to you, who have committed to these initiatives, they don't know how to deliver on those. And I'll give you some numerics here, right, to help you understand this problem. Currently, there's only 7,411 companies who have given SBTI, which is the Science-Based Target Initiative, some kind of a climate ambition or target with a plan, right? Only 7,411. Globally, there's hundreds and thousands of listed companies, let alone unlisted companies. And I would say majority of the people are not giving SBTI this information is because majority of them don't know how to do it. So why would they commit to it? So there is a massive, massive disconnect between what companies know about climate reduction or carbon reduction and climate action, and therefore the commitments they're willing to make. That's the second problem. And the third one is that investors, institutional investors, they now want to have climate impact, but they can't find it at scale and with integrity. They can find it in pockets in small private investments in technology, hoping that they will find a carbon capture technology over the next 10 years. But hope is not a good strategy when you're dealing with such a global existential issue. So these three problems, my team and I said, okay, how do we help solve for this? And we thought, and having spoken to many investors and investee firms over the last 7 years, and especially the last 6 years at Panarchy Partners, what we needed is, and what we've created under the Gigaton Coalition, is a unique investor-investee-led, and this is very important, it's investor-investee-led grouping of, or you could say investor-investee-led platform for solutions that are practical, financially feasible, and tested for decarbonization. And the third player in this coalition, other than the investor and investee, are solution providers for decarbonization. And just like I know for a fact that when I go to and speak to many of my portfolio companies in my global equity strategy who have a net zero target or SBTI target, I'm very happy that they have it. But when I say, show me the plan and show me the suppliers who are going to help you get there, and those suppliers can come in many forms. They can come in the form of consultants who are providing them with internal KPIs and organizational structures to create this change. It can come in software technology or hardware technology, and it can also come in the form of policy and research support that they might need for lobbying, right? Many of these companies don't have that. And the whole Gigaton Coalition is about providing a library of solutions that help decarbonizations, and it helps those companies that have already converted by having targets achieve those. And I suppose another way to look at it is the Gigaton Coalition, what it's not. It's not an initiative with plenty of signatories, but no solutions. Mm-hmm. It's not meant to be a consultancy that goes into a investee company and say, oh, by the way, this is your problem. Because companies who've already got targets in place, they already kind of know what their problems are. This is meant to, and this is not also a rating agency that is forcing companies to tick the box and get a rating and therefore claim to have certain climate and then stop there and say, okay, now it's not our problem. So I think for us, this is a very practical, we envisage this to be a library of climate solutions that investors and investees can tap into to get practical, financially feasible, and tested decarbonization solutions so we can address this problem as soon as possible.
And how are you building this solution set, if you will? Is it based on your 6 years of investing where you've seen what works and what doesn't? Do you have other partners who will also help you provide solutions? How's that all working?
Yeah, like any coalition, like any grouping, this has a snowball effect, right? You need to have a few visionary players who come in, they help you start the ball rolling. Where we're confident and we're comfortable is that over the last 6 or 7 years, we have, through our global equity strategy, engaged with some of the, I would say, best decarbonizing companies in the world. And from speaking with them, we already have a list of, let's say, solution set providers that we believe that should be able to help the companies and the investee companies who want to deliver on their carbon ambitions, if not at a faster pace and at a bigger scale as well. So this coalition of investors, investees, and solution providers is going to grow over time. We have intentionally have planned for the Gigaton Coalition to grow in 3 different phases, because we want to do the test case in phase 1, which is a very Asia-Pacific centric because we are based here, with the view that in phase 2 and 3, the Gigaton Coalition investor members, investee members, and solution set providers by phase 3 will be global in nature, therefore have an impact. If I may add one more thing that makes this Gigaton Coalition different from most other, dare I say, initiatives or platforms and all the rest, is that it in itself has put on itself a gigaton, 1 billion ton carbon emissions saving target for the next decade in phase 1. Because to us, we want to put the onus on the Secretariat of the Gigaton Coalition that are you truly delivering, helping investors who bring their investee companies to find solutions? Are you truly contributing to that? And contributing in an impact sense, are you helping bend the curve for them? Because if you're not helping them bend the curve, then you're not really adding any value, right? So that's another place where the Gigaton Coalition, in our view, is very unique. It helps bend the curve, and it has to prove its own utility.
Munib, you earlier said that you don't see the coalition as like a McKinsey type consultant who goes inside a company, identifies its problem, and then work with them to solve their problem. You are looking at companies that already have targets. They have already identified their problems. So shouldn't you work with companies that have no targets and try to make a difference as opposed to those who already have targets?
Well, CA100 is doing that already in some ways, right? CA100 has been sort of through their approach, telling companies you better put in place targets. And I think there's plenty of other organizations that are helping to convert the, let's say, unbelievers or unconverted. For sitting here practically on the ground, dealing with companies, for myself and my team, the priority became, how do we, and it's an urgency thing as well. If we spend a lot of time and energy just trying to convert the unconverted, what about the converted being able to deliver? That to us is a bigger opportunity and a challenge. It's easy to get someone to say, okay, I will commit to a 2050 target. Thank you, now leave me alone and I'll come back in 20 years time, right? But it's harder to actually say to someone, you've converted, you've given these targets, now let's have a discussion and see how we can help you. So we are not going to force or judge people for their targets. Yes, the companies that we have selected are pretty ambitious in what they want to do, but we want to make sure they actually deliver on that, and if not, deliver at a faster and bigger pace. So I think, impact, I always say impact is in the eye of the beholder. For some people, very much so what you're saying, there's more impact in converting someone who doesn't believe in this to believing in it. The others, like myself, is like, I'm very much a practical person. I'm saying, okay, you know what? Even though if the metric of believers is that they're SBTI, let's say, approved with their targets, our global equity strategy portfolio has 78% of our portfolio has SBTI approved or committed targets. When I go and speak to all those portfolio companies, I would say only a handful of them actually have a legitimate plan on getting there. And this is a reality on the ground, which any investor or any investee will tell you, that having a target doesn't mean that the game's over. It's how do you get there?
It's almost like the starting point.
It is.
Munib, I wanted to ask you a high-level question earlier. I forgot. I'm just going to ask you this now, and then we'll go back to talking about the Gigaton Coalition. In the US, we're going through this big hype cycle on AI-related investment. A lot of money is going in that sector. Do you worry that these sort of manias sort of crowd out investment away from climate-related investment, or the stock market is still being sort of justifiably or rather it is sort of rewarding companies that are doing adjustment toward their climate goals, or is the focus all on who's got AI in their name and should we just put money in them?
Yeah, well, it's a very interesting question, because I think even last time when we spoke, at that time there was some policy flip-flopping, and there's always policy flip-flopping, investors' interest waning and like increasing as well, right? So I'm not going to deny over the last, let's say, 18 months since we last spoke, right? Investors' interest in some of the hot environmental sectors that everyone thought was going to be the next, big thing has decreased, right? Prime example is look at EVs, right?
Yes.
EVs have taken a massive hit. At the same time, 18 months ago, hydrogen lost its, can I say the word sexiness? It did, right? So there are pockets of environmental investing that will become irrelevant for investors. And that happens over time. I mean, I've seen this over 30 years of investing. I don't think the environmental genie can be put back in the bottle. That's not going away. Now, yes, there's going to be sectors within the environment where for a while they might become the hot topic and everyone sort of gravitates to that and the money just flows and the media forces that sort of money towards that. But I think on the ground, industrial policies are moving in the right direction, whereby companies who are delivering decarbonization solutions, and as we spoke last time, as and when carbon pricing becomes also a lot more firmer and impactful for companies and their profitability, investors will see through that. So I think I'm not worried that AI is taking away all the money from environment. I think the hot money will always flow from one place to another. Then the kind of money that my team and I are focused on is not your hot money that is just looking for a quick buck. We're looking for investors, impact investors, climate impact investors who want impact at scale and with integrity, and our focus on listed equity space. And I think that is still at a very early stage.
Right. So coming back to the Gigaton Coalition, I think it's related to what you just said, that when you're making your pitch, if I may use that term, to companies, both investors and investees, to join this coalition, how are you trying to motivate them that why this coalition and not some other initiative?
Yeah. So it goes back to what I was saying earlier on. Most investors, and I'm talking institutional investors here, if I'm the CIO of, let's say, a big endowment or a big sovereign wealth fund or a big foundation, over the last 5 to 7 years, my organization has committed to some kind of top-down macro climate goal, right? It could be net zero, it could be committing to SBTI or going carbon neutral or carbon positive, you name it, right? There's all these things. And then I'm the CIO and I've been given the mandate. Now you convert your portfolio. Now my portfolio is very broad, wide, and for me to achieve that, I need to start moving as many levers as I can, right? And one of the biggest levers, or one of the biggest asset classes for any institutional investor or CIO is their listed equity space. And up until now, most people have just ignored the potential for decarbonization in their listed equity space, and this is where the Panarchy team has it as their mission, is to show and bring to the CIOs of these world that listed equities, you can have climate impact with integrity there. Our new strategy, which is 2.5 years in the making and third iteration of the Asian Environmental Action Fund that I first sort of spoke to you about in 2022, it, in our view and our belief, is that it comes as close to being a genuine impact investment in the climate space with all the credentials that is needed for an impact investment. And the Gigaton Coalition, by the way, is a big part of that. It's the Gigaton Coalition, and the strategy is very much in line. And it goes back to, why would an investor want to do that? Is because an investor wants to decarbonize their portfolio companies, and the biggest part of their portfolio companies, of their portfolio is listed equities, a fairly big part. But within that, the scope of decarbonizing and therefore moving the needle of your whole portfolio is massive. And as I shared with you last time we spoke, one company in Japan has scope 3 of about 400 million tons. Two companies, and to put it in perspective, Australia's carbon emission as a country is about 550 million tons per year, right? So one Japanese company almost makes that. Two companies put together in Japan have scope 1, 2, 3 greater than all of Australia, right, for 1 year. So if these companies are in your portfolio and you help them decarbonize and your whole portfolio's sort of carbon emission numbers become better, the chances are you're going to achieve your overall portfolio goals. So that's for why investors would join. Why would investees join, right? These are companies, right? And this is a very, very important topic. Many people have said, why would a big listed company talk to a Gigaton Coalition? First and foremost, we're not an initiative which is forcing a carbon or a climate target down their throat. We're saying to them, you already have a carbon target. We are here. Your investor has brought you to the Gigaton Coalition, and we are here to help you solve for the challenges that you have. You tell us what your challenges are, right? We are going to provide you various options, solutions for that decarbonization challenge. And from a management perspective, if the management of the board of a company know that an investor has brought a few climate solutions to them, I think they will listen to that climate solution a lot more proactively than if it was just coming from the sustainability team. That's the first thing. Internally, an investor bringing a solution has a lot more impact than if the sustainability internally is telling them to do that. I think it's also the name and fame part of it, being part of a coalition and being supported by other investors becomes a sort of almost like a badge of honor for some people as well. So that's where the investee companies should come on board and take these solutions in a proactive way. And the last one is, why would solution members come to it? It's a commercial arrangement. The Gigaton Coalition is only a matchmaker. At the end of the day, the companies are going to have to say, okay, is this consultancy going to help me? I'm going to pay for it. Is this solution set software going to help me? I'll pay for it. Is this hardware going to help me? I'll pay for it. Is this research going to help me? I'll pay for it. So it's not meant to be for free. The solution providers, they are going to have at their disposal companies that are converted, companies that have investors taking them to them, and they will also have investors who potentially could be investing in some of these solution providers because they see that they're growing in size and scale. So I think it's a win-win-win for all members of the coalition.
So it is going to be an ecosystem of sorts, if you will. There are solution providers, there are people who need solutions, and then there are people who want to make money investing in companies who are solving for climate change. And so you're trying to create a bit of an umbrella for that. Munib, I understand that in addition to the Gigaton Coalition, there's also this thing called the Asia Gigaton Fund. Care to talk about that?
Yeah. So the Asian Gigaton Fund, as I mentioned, is the third iteration of the Asian Environmental Action Fund that we started talking about in 2022. The team has gone to the back to the drawing board again and again to fine-tune fine-tune our original version into what is now the Asian Gigaton Fund. And as the name suggests, first of all, it's Asia Pacific focused. Secondly, the gigaton, meaning that it is going to invest in companies with a view and with an ambition that it will deliver at least 1 billion tons of cumulative savings over the next decade. That's at least, if not higher. And that is the focus of this impact fund. Now, this is where I think I need to be also for the viewers. One thing that we have been sharing with our institutional investor partners is that there is a thing called climate conscious strategies, which is majority of the strategies currently, and then there's a climate impact strategy. And the difference being climate conscious strategy are strategies where risk return are still the number one priority, but the portfolio is created in a way where it has certain climate goals, guardrails. As you asked me a question, would you buy in a company that is a fossil fuel but is expanding but not doing this or doing that? Those guardrails, as long as they're climate, everyone will have their own climate guardrails and therefore climate goals. That becomes a climate conscious strategy. And even some of the very thematic climate strategies out there come within that because they still focus on risk and return. But then you have a smaller but growing focus on what we call pure climate impact, right? This is where these are, you could say, concessionary strategies where financial returns are expected, but the first priority is, can they deliver carbon outcomes that the investor wants? And as I said to you, in the listed equity space, many people have not been able to create this because the rules around impact investing that have been now put in place by developmental financial institutions over the last 4 decades, even various foundations like the Bill and Melinda Gates Foundation, Ford Foundation, all these folks who've been doing impact investing for decades now, they have very well established now rules on what is impact investing. And not many people have been able to put those, let's say, rules and frameworks in place and deploy them in the listed equity space. And when we embarked on this ambition to bring to our institutional investors a climate impact strategy as genuine as you can get to impact investors' requirements, Gigaton Coalition was the missing element that we had to create. Because the Gigaton Coalition, what it does, it proves to investors that what they brought to the table was not just financial capital, but some kind of add-on contribution that helped their investee companies bend the curve, which I talked about earlier. So the Gigaton Fund and the Asian Gigaton Fund and the Gigaton Coalition have a symbiotic relationship. They sort of kind of help each other, support each other, and especially in phase 1, the Asian Gigaton Fund is the sponsor of the Gigaton Coalition. In phase 2, we expect other investors to come in and use the Gigaton Coalition. And in phase 3 of the Gigaton Coalition, we expect Panarchy Partners and the Asian Gigaton Fund to be just another investor utilizing the library of solutions, because we want the Gigaton Coalition to become an open source solutions platform. But phase 1, the Asian Gigaton Fund, is basically supporting and growing the Gigaton Coalition. If I may now, for the Gigaton Fund, the Asian one, and these are some interesting numbers again. The Panarchy team has identified 585 listed companies in Asia Pacific. Their total scope 1, 2, 3 is about 18 billion tons per annum. That is 35 to 40% of global emissions. 585 companies. These 585 companies have given us targets of reducing about 4.5 billion tons off that 18 over the next decade or so. So for us, as an investor in listed equity space, now having the Gigaton Coalition in place, we can go and identify a smaller subset of these companies and say, okay, we're going to invest in you. The Gigaton Coalition is going to provide a whole solution set of options for you to choose from to help you expand your decarbonization plans. And that's how the Gigaton Coalition and the Gigaton Fund operates and works. So that's the relationship, that's the size and scale of what we think both the Gigaton Fund, Asian Gigaton Fund, and the Gigaton Coalition can have a climate impact. And that's why I get so excited. because this is sitting right underneath, under our noses, and we just need to have a solution and a platform to sort of catalyze all these sort of impacts.
That sounds very promising. So, Munib, at the beginning of this podcast, you sort of pointed out that you've had around 18-month periodicity between podcasts at Kopi time. So let's say we meet again in 18 months' time, hopefully over a cup of Kopi for real. And so it's late 2025.
Yes.
What would you sort of talk about in terms of the successful path between early 24 and late 25?
So by then, I hope we'll be sitting here and I'll be telling you that our biggest challenge is not finding people to be part of the Gigaton Coalition, but how to manage the number
surge of interest.
How many people want to become a member and how to manage that, right? How to manage that. That's first and foremost. So I do hope that, in 18 months' time, the challenge is not getting people in the coalition, is more like who should be in the coalition. Secondly, that the Asian Gigaton Fund is up and running, and we have deployed a lot of the capital in companies, and we're engaging with them and on track to start contributing to what their impact is. And I would say we are in talks to expand the Gigaton Coalition into phase 2, which is where investors who are our founding investors in the Gigaton Fund, Asian Gigaton Fund, they can bring their portfolio companies from outside of the Gigaton Fund into the coalition because the solution sets that we have provided and shown are actually working, they're practical, they're financially feasible, and they're tested. And so therefore we get a broader, we can give an ambition for a greater than multi-gigaton of contribution from the Gigaton Coalition. So that's my sort of ambition for, and I'd be very happy if in 18 months' time I was ticking those 3 boxes.
Well, here's to ticking those boxes in 18 months' time, Munib. This has been fascinating. Wish you the very best of luck, both with the Gigaton Coalition as well as the fund. Thank you so much for your time and insights.
Thank you, Temur, and I do look forward to our next chat in 18 months. And once again, thanks for taking this message and sharing it with all your readers. Thank you so much.
It is super, super important. Kopi Time was produced by Ken Delbridge at Spy Studios. Violet Lee and Daisy Sharma provided additional assistance. It is for information only and does not represent any trade recommendations. All 117 episodes of the podcast are available on YouTube and on all major podcast platforms, including Apple, Google, and Spotify. As for our research publications, webinars, and live streams, you can find them all by Googling DBS Research Library. Have a great day.